Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at NTRA, or Natera, Inc. Natera is a global leader in free DNA testing with a focus on women's health, oncology, and organ health. Here is the barchart.com technical opinion for NTRA. The bar chart technical opinion is a 100% buy with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that NTRA is well above the moving average line, so the monthly trend in NTRA is up. Now we're going to look at the daily chart. A stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been above the green line since December 2023, so the daily trend in NTRA is up. Next, we want to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. NTRA is below the upper Keltner channel line, so NTRA is inside the buy zone. Since the trend is up, we want to buy a call. NTRA has 6 option chains to choose from. We're going to use the Feb 21 option chain. Right now, the February 21 options have 47 days to expiration. Here's most of the NTRA option chain for Feb 21. NTRA closed at 167.60 on Friday. That means any calls on the list from 100 to 165 are in the money. Let's take a look at the profit potential for purchasing the 170 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 170 call is 13.20 to 14.10. We try to enter at the midpoint, so we'll use 13.65 as the buy price. We can see that if the NTRA stock price is flat at 167.60 at option expiration, the 170 call will lose 100% of its value. Ouch, this is an unacceptable risk. That kind of loss can wipe out a trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 145 strike call to see if it qualifies for the 1% rule. Here is the call option calculator picture for the 145 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the NTRA stock price is up 1%, the 145 call will lose 20.1% of its value. We want that to be break even or better, so the 145 call does not meet our requirements. Let's see if the 120 call will work. The bid-ask spread for the 120 call is 47.60 to 51. We tried to enter at the midpoint, so we'll use 49.30 as the buy price. The 120 call works. If the NTRA stock price is up 1%, the 120 call will make a 0% or minus $2 loss. That's essentially break even, so the 120 call is the one we'll buy. The call option purchase calculator also shows that if the NTRA stock price increases by 2.5%, the 120 call will make a 5.1% or $249 profit. If the NTRA stock price increases by 5%, The 120 call will make a 13.5% or $668 profit. If the NTRA stock price is up by 7.5%, the 120 call will make a 22% or $1,087 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the NTRA stock price does not make the expected move up and remains flat at expiration, the 120 call would only lose minus 3.4% or minus $170 compared to the minus 100% or minus $1,365 loss for the 170 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the NTRA Feb 21 145 strike call and sell to open the Feb 21 155 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 145 call for $28.30 and sell the 155 call for $21.70. So the entry price or debit cost for the spread is $660. The call option spread analysis calculator shows that the spread will make a 51.5% or $340 profit if the NTRA stock price declines by 7.5%, remains flat, or increases in price when the options expire. Creating the debit spread will allow us to collect a $2,170 cash credit to our brokerage account for the sale of the 155 strike call. As we said on the previous slide, this reduces the cost of entering the spread to $660. Here's a note regarding earnings reports. The next NTRA earnings report is scheduled for February 26. Let's review the trades one more time. The first trade was a call purchase. It said to buy to open the NTRA Feb 21 expiration 120 strike call for $49.30. We also reviewed a spread. The spread said to buy to open the NTRA Feb 21 145 strike call and sell to open the Feb 21 155 strike call at a debit of $660. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.